It all started on January 6th when Trump presented a poorly done high school presentation and waged a trade war on the world. This was happening for the first time after Great Depression in 1930s. Since then, after multiple rounds of negotiation, the final tariff rates announced on India stands at 50% with more tariff threats in line. Hey investors, welcome back to another episode of vishalvealthview, a weekly series where we bring you major market updates while managing a 8-figure portfolio. In today's episode, we'll be diving in deep into the details of these tariffs announced by Trump and how it will affect Indian economy. Apart from that, we have latest result for Suntech, VBL, Tips Music and Anantraj, and we'll be discussing their results as well. Along with that, I'll also discuss how I'm planning to de-risk my portfolio because of these tariffs. In my opinion, this trade war can go either way. It can be a leverage tactic, or this can get really worse from here because both of these countries are having significant amount of arsenal which they can use to harm to each other economies, and I don't want my portfolio to be caught in the middle of that. So I'll also discuss how I'm planning to decouple my portfolio from these tariffs as much as possible. So without wasting much time, let's start this episode. First, let's try to understand what will be the impact of these tariffs on Indian economy. Now, US is India's biggest trading partner, and Trump had previously imposed a 25% tariffs on Indian good. And this time he's increasing it by 25% and taking it to 50% with more tariffs in the pipeline. So, looking at this graph, you can see Indian economy has a pretty diversified export portfolio. So, even though the US market is going to take a hit, we have an opportunity to export to other markets. Now, in the context of Asian continent, Indian economy is one of the economies that is the least reliant on export and has a huge amount of domestic consumption in its GDP. As of now, India only accounts for 22% of its GDP to exports. Now, this shows us what's the distribution of Indian exports to US. What's the portfolio of Indian exports? Majority of Indian exports include gems and jewelry and machinery and appliance, almost 4 billion of exports per year. Now, if these tariffs stand, then these industries will be the most impacted, as it will be hard for them to compete in the global market, specifically in the US market. And considering the consumer base for gems and jewelry, I do expect that even though they are targeting top like 5 to 10% of rich Americans who will be able to buy these products. But the factor comes in like if the cost is just too high, the sales is going to drop because 50% is a tariff that can just assassinate industry. Now, in my opinion, the drama between the trade war will continue, and as an investor, I'll try to make sure the in the coming year, whatever fresh capital I'm putting in, I'm not putting in any of the companies that are directly exposed to any of the US exports, and specifically companies that are involved in gems and jewelries and manufacturing business. So moving forward, I'll try to minimize that. Since last 6 months, I've been making sure whatever my portfolio is, it's either in indexes or ETFs, or it's highly domestic. I've been cutting down my position in uh, Mirai selling FANG ETF, and I'm also cutting down my position in Nasdaq 100 ETF, and I have booked some profit in this indexes, which are a majority like majorly US focused index, US tech focused index. Now let's talk about tips music. I have some amount of capital invested in this, and right now I'm sitting on a loss, and I'm reevaluating what's the right strategy. The company right now is uh, like sitting on a loss with respect to its 1 year value. So let's take a look at like the fundamental analysis of the company. What are the new results like? What's the company's management is saying? Okay, so in quarter two, financial year 25, the revenue was around 80%. That means the revenue jumped by almost 32% year on year. And EPS was standing at about 13.02. They were spending around 14 crore on their content cost. That means the total amount that they were spending with respect to quarter on quarter that jumped almost 200%, which is a big jump. The company has been giving a consistent dividend of rupees 2 per share. So if we see like what did they do in Q2, they launched almost 125 songs, and the subscriber base on YouTube right now is sitting at around 10 108 million, which is a big number. Apart from that, they are planning a synchronization deal with Motorola Pipeline in additional to a brand partnership. And digital platform makes YouTube, Spotify, Savan, Amazon Music, Apple Music continues to drive growth. No material impact expected from loss of Wink Warner. Okay, so seems like the Wink or Warner deal is gone, but the like primary business model of Tips Music is they purchase music directly from the producer or from the writer, and then they own the rights of selling and distributing that music or that song for almost 50 or 100 years. I think that's the basic business model of Tips Music. So if they're able to produce these 125 song in one quarter, they are going to be like generating revenue on these 125 songs for next 50 years to come from all these streaming platforms. So all in all, as per DCF model, the value of Tips Music should have been about 720, and right now it's trading at about 22% discount with respect to its DCF value. Now, you have to keep in mind one of the deal, which is Warner Bros. Deal and Wing deal, they are gone now, and the company is going to be looking for more different revenue opportunities. However, the risk involved in a business like that is relatively low because they don't have to manage a lot of inventory or have a huge amount of operations, and they're mostly focused on the creative aspect. So, my conclusion is I'm still going to hold my investment in Tips Music even though I'm sitting on a loss. And if time is right, I'll probably think about building small more position in this particular company. I also want to verify what's the management guidance in the latest con call. As per the CEO, as of now, they are expecting 30% growth in FY25. And out of that, 25% growth is going to come from digital platform. And they are planning a new strategic synchronization with Motorola and a brand partnership to launch almost 125 songs across 39 films. I think this is something that's new, and both of these plans were already like given by the management of the company. So after this particular news and these announcement, there was a volume spike in the price around 16/10/2024. Apart from that, the company with respect to DCF derived intrinsic price, it's like undervalued right now, but still it's trading at a really high P. So any like involvement in a company like this is always risky. So bear with caution. Okay, next company on our list was Suntech Reality. So I'll just go ahead and ask. Oh, there's a typo. Okay, the Suntech is also trading below its 250 DMA. Now, I have a huge amount of holding, almost 10% of my portfolio is in this particular stock, and right now I'm sitting on a loss of 2%. But again, this seems like a good opportunity for me to like build more position in this company. So let's see what's the market sentiment and what's management saying. So from like the overall news that's coming in, there is only three negative news article. Let's see what were they. So hundreds gathered to mourn as Air India first flight. Okay, I don't think this is highly related. Co-pilot to led rest in Savory Domway bids goodbye to young flight attendant. I don't think that's also highly relevant. So not no major uh like negative news for this except this one reality companies Q3 to be mixed followed by an action packed Q4. So let's see if there is going to be a turnaround in Suntech, but let's try to understand what's the latest results of this companies like. So F1 Q1 FY26 Q1 FY26, I'm sorry, the revenue stood at 188 crore, the net profit around 33 crore, and the margins are standing at 25%. Now, these are EBITDA margins, not net margins. So there's a difference. Apart from that, what is management saying? So management reported a pre-sales of about 657 crore, which is a 31% jump year on year. Apart from that, collection is standing at 351 crore, which is a 3% jump year on year. The increase in pre-sales is just visibility into the increment in top line of the company. The company is also planning a joint venture with a luxury housing project in Mira Road. I think this is a existing project in their portfolio, which they announced really long back, and the company has really low net debt to equity ratio, because of which I don't feel too much uncomfortable in holding position in this company, because this company has seen some market cycles. Now, what are the major risk and red flags related to Suntech? I think all these four risks to some extent I'm aware about, which is the revenue concentration. Majority of the projects that they are operating in are high-end luxury segment, and they are specifically located in Mumbai suburban area. And a macro slowdown can easily curb the pre-sales, because of which the company's valuation has been relatively high in the past. Apart from that, there is always an execution risk that comes in when you are a real estate developer, because of these large joint venture timelines. If something changes in the other company's management and they can just pull back, you never know what things can turn out to be in the future. Apart from that, the DCF value assumes an aggressive FY26 revenue, and any kind of slowdown reduces any kind of upside potential in the company. So, all in all, as per Nifty GPT, the intrinsic value of the company stands at 650. uh, I'm not planning to build more position in this company. Moving forward, I think I hold a decent amount of capital in this particular company, and I'm going to see what's the future of this company looks like, because from the looks of it, there is no major red flag that I am looking at. The way the company is operating, they're still operating with high margin, low debt, and they have a good free cash flow. So I'm comfortable holding this position. Okay, we also have results for Varun Beverage out. So let's try to understand what is the latest management guidance for Varun Beverage and what's the growth projection. So as you can see, the price trend of Varun Beverage in last 1 year has been in downward direction. The stock touched its 52-week low at about 450 rupees in July 2025, and it has been in a significant rally since then. So let's see what's the latest management guidance. What are they saying, and what action do we need to take on the basis of that? So as of now, management guidance, they are expecting a target of 13% CAGR growth in revenue over 24-27 in these years. The EBITDA margins are going to remain stable at 25%, and they are planning more capex in DRC. The current capex that they were planning in DRC is completed, and the plant is running at 100% utilization, and they are planning to open a second facility in DRC. Now, DRC is Democratic Republic of Congo. It's a country in Africa, and it's a country that will probably spend a good amount of money on bottling uh, or buying sugar carbonated drinks, because the average calorie available for a human in a country like DRC is relatively low. Apart from that, the company also came out with a QIP and raised 7,500 crore. They're planning to have more expansion and acquisition. So you can expect that whatever cash that they're raising from this QIP, they're going out and planning to fuel their expansion. So I think this is a good time to be a shareholder in Varun Beverage. Apart from that, if we take a look from a technical snapshot point of view, what are the patterns are we observing? There is a double bottom W being observed. Now, this is a bullish pattern in my opinion. So this is the W that is being forming. Apart from that, the long action that Nifty GPT is recommending is having entry at 540 if it breaks its recent high, and having a stop loss at 515. I think I'm a long term investor in Varun Beverage. If you see my portfolio right now, I'm sitting on a profit of almost 200%. I invested in this company back in year 2021, and since I'm sitting on a significant profit, I'm not like willing to even sell it because I know fundamentally this company is really strong. So, for existing investor, I think it's a buy or hold stance. Like if you are a long-term investor, this is a good, really good time to invest in Warren Beverage because they are looking out for expansions. They are like planning capex, and the stock has corrected almost 20% from its high in December 2024. So that's my take on Varun Beverage. So I'm going to be building position in this company in the coming days because I think the price is about right. The company is not trading at an extreme overvaluation, and they are planning a good capex in the future, and they maintain a healthy free cash flow. Okay, finally we have Anantraj. Now, Anantraj is a real estate company that's venturing into data center business, and this company has been in my portfolio since last year, and right now I'm sitting on a loss of about 20% on this particular company. So let's try to understand what's the story of Anantraj. So in last 1 year, the stock has seen a spike, and right now it's in its correction phase, and it's trading around its DMA right now. Let's try to understand what's the story like that's more important. I'm not someone who can invest just by looking at the uh, technicals. So this company has been one of the primary beneficiary of the entire data center story because they were able to make strategic collaboration with Google and with the one of the Indian company that's involved in this business. I think it's called TIL. I don't remember the name exactly, but these are the main two strategic partnership of Anantraj that gave me confidence. So let's see what's the management outlook. So they're targeting data center and cloud service revenue by 1200 crore of 1200 crore by FY 2027 and 9000 crore by FY 32. Now this is a really huge jump. Apart from that, they have planned a investment of 2.1 billion rupees to add 300 megawatt capacity in Haryana by 2032, a new luxury residential project of 1.1 million square feet that will be available by Q3 24. Now let's take a look at DCF analysis because I want to understand what's the valuation of the company before putting in my money. So I'm assuming the revenue targets to be 1,200 crore by FY 27 and 32. By FY 32 we are going to have a revenue of about now 9,000 crore. Now this is almost a jump of 4x from the current revenue number of FY 24 25 if we see over here 2,060 crore. So let's see what's the DCF analysis is like. Now, the summary of DCF analysis says that the intrinsic price of this particular stock, based on the fact that we are expecting at least 1,200 crore in revenue just by data center business, it's coming out to be 720 rupees. So, with respect to that valuation, the company is right now trading at a discount. But again, the company is richly valued. If we see the PE of Anantraj, it's still sitting at 40. Apart from that, the technical view, the price is sitting at below its 50 and 200-day moving averages, and it's in oversold zone. That means people are bearish about it, and the sentiment is pretty negative. However, the company does not have any significant amount of debt if we see, and they are pretty much asset positive company. Now, from terms of risk factors, the upside hinges on successful execution of aggressive data center expansion and the 2.1 billion rupees capex that the company is planning, and the residential pipeline that they are also planning. Any delay, any execution bump can, like, you can expect, if that happens, then stock price is going to take a hit. So recommendation is hold with a view to reduce. So up until the price is above 560, I think that's a technical signal that until unless that happens, Nifty GPT is not recommending me to like invest in that, but I mostly invest based on the valuation, whether the current price makes sense with respect to the future earning or not. And on that, I think current valuation is attractive. So long term investor, this is a good time to make position in this particular company, and the technical signals are saying otherwise though. And that's all what I have for you for today's episode. If you enjoyed this video, do hit the like button and subscribe to Vishal Wealth View. Bye bye, stay safe.